Here is the story. While I'm doing my revision about this topic, suddenly
Excuse me, darling. I have a message for you.
I got messages from the unknown about this. So let's jump to the question. What is account receivable? Account receivable actually refers to money owed by customer in exchange for any goods or any service that have been delivered or used, just like food deliveries or any kind of delivery service. But it's not paid yet.
Habis rosak pun aku. Aduh, pecah semua. Aku pun tak boleh malu kat sini. Dah. Tak skill. Skill aku buat.
Encik Hamid is a successful businessman. He invests large sum of money into his business. Suddenly, he faced some economic crisis that make him lose lots of money and went bankrupt.
Baby, lock the doors and turn the lights down low.
But one day, he's got lucky and becoming rich again. He's speechless and no word can describe his feelings. Just be thankful that it happened.
Aku syarikat JNZ ni boleh tak aku kalau orang untuk bagi hutang aku? Hello, Assalamualaikum. Ni Puan Amina dari syarikat JNZ ke? Ya, saya Lisa. Saya ingin menyelesaikan hutang sebelum ni. Mungkin pihak Puan pernah menghubungi saya tapi atas sebab-sebab tertentu saya tak dapatlah kat panggilan tersebut. Saya mohon maaf lah Puan. Okey, baik Puan. Terima kasih.
Hello everyone. I'll be continuing on explaining more about this topic called accounting for receivables. I'll be explaining more on how can we record transactions involve account receivables. So let's begin with the simple transactions. So how should we record this on a journal? It's like this. So 1st July, account receivable increased by 1,000 ringgit and sales increased by 1,000 ringgit. 5th July, allowance and sales return increased by 100 and our account receivable decreased by 100. So for the last transaction, Muhammad company pays his debt. So first we need to recognize whether he paid his debt by cash or by bank. And secondly, we need to deduct the amount of they paid from their account. So here, 1,000 minus 100, we got 900 ringgit. But you should be careful with these terms, 2% for 10 days. From July 1st until July 11, the total day is actually 11 days. So Muhammad company will not get any discount. So after we've done generalizing everything, we need to transfer them to the ledger. So this is an example of format for a ledger. For this is account receivable. So on the debit side here is what makes our account receivable balance increase. On the credit side here, what makes our account receivable balance decreases. So moving on. We have two ways in counting bad debt expenses. The first one is direct write-off method and the second one is allowance method. In the allowance method, we have two bases that we need to follow. First is receivables balance basis, and the second one is sales basis, whether it is from our credit sales or our net credit sales. So the first one is direct write-off method. See, here is an example. So 31st December, balance of account receivable is 148,000. As at the date, the debtor's name Ali is unable to pay his debt, totaling to 4,800. So first, we need to recognize how many can he pay. 4,800. So two accounts involved here. The first is bad debt expenses, and the second one is account receivable Ali. So why do we record it as bad debt expenses? It is because mainly we need to pay for his debt, which eventually became our own company's expenses. And the second one, which will be reduced, is his account receivable, which is Ali, because we already paid for his debt. Next one is the allowance method. So in allowance method, we have two bases that we need to follow. The first one is percentage of our ending balance for account receivable. First, we need to find our ending balance for account receivable. And secondly, we need to find percentage that the company or the corporation has fixed for us. So 2% multiplied by 110,000, we get 2,200, which is our ending balance for allowance for doubtful debt. So to fund our bad debt expenses, we need to open up our allowance for doubtful debt account and put the balance first. So early balance is 500 and our ending balance is 2,200. And the missing item that we need to find is actually our bad debt expense. So to record this on a journal, just simply put debit bad debt expense and credit allowance for doubtful debt. So the second basis is our credit sales basis. So 2% multiplied by our credit sale, which is 23,000, we will get 460. 460 here will be our bad debt expenses. So we will not have to open our allowance for doubtful debt account like this. So we will straightforward taking it, bad debt expense 460 and allowance for doubtful debt 460. So the next part is bad debt recovery. A bad debt recovery is a situation where an account receivable that had his account closed because we thought that he can never pay his debt came to us and paid his debt back. So an example here, Encik Ali has paid his debt that was already classified as bad debt previously. So on previous situation where we thought Encik Ali can pay their debt, suddenly he paid his debt. So first thing first we need to do is we need to reopen his account back. So here is how we record it on the journal. So first, account receivable Ali 4,800, and then the next item that we need to record with this is bad debt recovery 4,800. Bad debt recovery is on credit side because it is actually our revenue because we gain money from it back. So the next thing we need to do is record how he paid his debt, whether by cash or by bank. So our cash or bank increased, so it must be debited. And Encik Ali paid his debt, so his debt decreased, so credit side 4,800. So thank you for watching, and I really hope that this video can help you understand this topic better. Bye.